Good evening, friends. Welcome to this session on analysis of monetary policy review statement, September 22, which was announced on Friday by RBI Governor. Given the kind of economic situation prevailing globally, this statement was with the steps taken by MPC this time, they were being looked with a great amount of anxiety by everyone, particularly in light of the rate hikes being done by Fed. And everybody was thinking how much the MPC here will follow the Fed. And after that, whatever has been done by MPC, it has been welcomed at least by the stock markets. But the main analysis will be presented by our three panel members today. Mr. MS Sundararajan, ex-CMD Indian Bank, Mr. SC Kalia, former ED Union Bank of India, Dr. Farid Ahmed, former ED Punjab Sind Bank. Sundararajan sir will be telling us about the economic situation prevailing in the country and globally, which was before the platter, before the MPC, while taking these decisions. Then Farid sir will be telling about the decisions which have actually been taken during the meeting. And then Kalia sir will be analyzing this policy with respect to its sectoral impact, with particular emphasis on banking sector. So I'll request Sundararajan sir to start his presentation. Over to Sundararajan sir.
Thank you, Mr. Arvind. Esteemed panelists and well-wishers and my dearest friends. Mr. Arvind, I need the slideshow, sharing the slides.
It's there, sir. You can start.
Okay. Three, my best wishes and greetings to all these people. Let me start with this. I think the Honorable Governor has started quoting two quotes or three quotes. I have been saying that no, for the past two monetary policies, he started quoting from the father of nation. It is in fitness of thing that today being the October 2nd, that we should remember him. So he said that no, while making the presentation, towards the end, he was saying, we are ever wakeful, ever vigilant, ever striving. He wants to give the confidence to the market that whatever the best that we can do, we are doing. We are insulated. I mean, in the insulated means not we are globalized. So now nobody is insulated, but we have insulated the economy. That way he is giving the confidence to the market. And then as soon as the monetary policy was announced, the next day, the Honorable Finance Minister went on record and saying that, no, I'm comfortable with this. And then we are in an era of robust economic activities. So the economy is safe. She also wanted to add strength on this. And then towards when we read, towards the end of the monetary policy, again, the Honorable Governor started quoting, today, despite the gathering of the clouds over the global economy, Indian economy inspires optimism and confidence. And then he gives an assurance that RBI will remain resolute and persevere in our efforts to ensure price stability, financial stability, at the same time, supporting growth. If you ask me honestly, RBI Governor must be spending sleepless nights because it is beyond his control. What is happening? The spillover of the globalization is now harming this Indian economy much more than what it is getting harmed through its internal things. Okay, let us start making this presentation. Now, as usual, I would like to make a presentation of the global economy. Then let us come to the Indian economy. So the two shocks, originally we had the COVID shock and then the geopolitical tension of Russia's invasion of Ukraine started. Now added to this, there is one more shock, that is every central banker would like to insulate his economy. So they resort to what is called the rate hike. rate hike. They are resorting to the rate hike. So he is also putting it as one of the shocks. It is not only the rate hike. Every economy has to be protected, nothing wrong. But what harms more an emerging economy like India is the forward-looking statement. Forward-looking statement. Unfortunately, with regard to India, if you're a public listed company, there is a SEBI which puts a regulation, you should not make any forward-looking statement. Whereas the global economy, neither the World Bank nor the IMF put a stipulation that you should not make a forward-looking statement. So much more than that action, the forward-looking statements are also getting the impact. It is getting its impact, what we call as a spillover of the global actions on the other economies, especially emerging market economies. So the aggressive monetary policy action plus forward-looking statement. See, these actions are required to protect their economy, but in an integrated global financial system, you cannot protect yourself from this spillover effect. That is what he wants to drive home. Then the sharp hike that is happening, especially in US economy, as also in other economies, and then which causes an impact on the financial market, in all the segments of the financial market, be it equity market, be it bond market, be it currency market, they're all impacted, and there is absolute turmoil that is taking place, nervousness taking place. Everybody is looking to the safe havens, and then there is a movement of the currency from emerging market economies. So RBI is conscious that the global economy is in the eye of new storm. And then if you look at it globally, the various indicators like, PMI, they are all showing very, very poor PMI. If you take, for example, to cite, for example, if you take the PMI of USA, the composite PMI is 4950 in September. As we all know, any PMI figure above 50 is comfortable. Below 50 means it's not comfortable. Only thing is USA may say that, no, I am getting comfort, though it is below 50, that is 4950 for September. It is an improved version over 44.10 that we have experienced in the August month. If you look at UK, the PMI for September was 4840 compared to it was 4960 in August. So that way, if you take the various parameters, employment, be it the employment figure, be it PMI, it always shows that globally there is a weakening of the global growth momentum, and there is a downside risk to the growth and also the global trade. And then, needless to say, the global economy continued to be bleak. Financial conditions are getting tightened, and there is a threat of recession. And every economy is facing a threat of recession. And then inflation is persisting. In spite of the actions that are taken by the central banks of the different economies, inflation is persisting. And then the pandemic has caused it, the geopolitical has also thing, which have resulted in the supply-demand mismatches. And then so central banks are all creating a new charter, new territory. So in which one of the major action is rate hike. They are not bothered. Normally rate hike means growth will be impacted. Now they want to contain this ugly face of inflation. Even it amounts to sacrificing the growth. They say that we don't mind, we will increase the rate. That causes the nervous investors' sentiments, and there is always a flight of funds towards the safety. Now, US dollar has strengthened to the best extent for the past 2 decades. It has strengthened itself. It is a record high. And then many of the advanced economies, many of the emerging economies are facing sharp depreciation pressures. See, emerging economies, the more problem is not only the funds are moving out, there is a slowing of the economic growth, food and energy prices are going up, and then whatever the spillover.
Good evening, friends. In detail perspective of the world economy and Indian economy under the circumstances under what the Reserve Bank of India has announced this monetary policy. The Monetary Policy Committee, Sundararajan ji has covered everything. There may be a little overlap when specifically I'm talking about the monetary policy announcements. So, as usual, we'll start with the inflation position in the country. See, exactly 1 year back, from the October 2021, inflation started rising up in our country. If you see the chart, 4.35 in September 21, increased to 4.48, and it has peaked in April 22 to 7.79. Then there was a decreasing trend, 7.04 in May, 7.01 in June. Then after the end of the first quarter, we felt that it will be around 6.71. It is a decreasing trend, but unfortunately, again, the inflation has gone to 7% in August. And then it is expected that the inflation in the September is estimated to be 7.14. So again, the inflation position is rising. Then coming to the projections of Reserve Bank of India, as Sundararajan ji was telling, there are so many factors which are working on the trajectory of the inflation. So different quarters they have projected or estimated different inflation levels with uniformity in some quarters. So the inflation trajectory is continues to be heavily dependent, as told by Sundararajan ji, on geopolitical developments, international commodity market dynamics, global financial market developments, continuing appreciation of US dollar, and within the country, the spatial and temporal distribution of southwest monsoon. Still, till now, its impact is there on the inflation projections. So taking into all these factors and also assuming overallly normal monsoon in 2022, and also the average crude oil price and Indian basket $100 per barrel. Taking into all these conditions and factors, the Reserve Bank of India or the MPC of Reserve Bank has estimated that the inflation will be around 6.7 for the year 22-23 as a whole, and the coming quarter, that is the quarter which was ended for September 7.1 and December quarter 6.4 and 5.8 for the fourth quarter, that is the March ending with 2023. But overall, they are estimating about 6.7, but all depends upon the factors which I have listed before showing these figures. Then coming to the GDP, again, GDP, if you see the GDP movement in the country in the last 2 years, if you see, it was suddenly, we are all aware because of the pandemic, it has gone to negative by 23.8% for the quarter ended June. Then slowly it has improved, and now it is thinking that it will, the estimate is it will be lower than the what earlier they predicted. This is because the first quarter estimation was 16.2, but the economy performed to an extent of 13.5. So whatever the estimates the Reserve Bank of India is predicting or projecting, based upon the, as rightly said by Sundararajan ji, that late recovery in sowing of the coverage in Kharif season, and also the comfortable levels of reservoirs for the Rabi crop, which is the most important from the point of view of the some of the geographical areas which gives food grain production, particularly in the Rabi season. And also keeping in view the government's continued thrust on the capex expenditure during this year, and also the capacity utilization increase. Almost all, when compared to the last year, it is a very good improvement, not only last year, in the last 3 years.
SME loans are nowadays linked to external benchmark. And as per the data which I read sometimes back, around 30% of the loans outstanding credit is linked to external benchmark. And these have to be reset, once in every 3 months. Now, to that extent, I think this repo rate hike is definitely going to impact all the retail loans and MSME loans which are linked to external benchmark, correct? And in that particular context, I think the cost is going to go. Which sectors are going to get more impacted? I think the most, rate sensitive sector would be home buyers, particularly those, who go in for affordable housing segment. Now, but looking to the kind of growth that have been witnessed in the home loan market in the recent months, and with the onset of the festival season, whether there is going to be that kind of impact on the home loan demand, my personal view is because of the onset of the festive season and rates still, let's not forget what kind of rates used to be there. I think this is not going to have much larger impact on the home loan portfolio of the banks. Banks will continue to grow their home loan portfolio, retail loan portfolios. And of course, some adjustments in the policy will have to be made rather than in order to, provide relief to your existing and prospective customers. Maybe the tenure of the loans get elongated so that the impact of higher EMIs do not take place. But real estate sector and home buyers are the sectors which may face some adverse impact, and because these are all financed primarily by the banking sector only, to that extent there can be impact. But given the past trajectory of the growth and the onset of festive season and the busy season from October onwards, I personally believe it is not going to have any major impact. Now, so far as all other loans are concerned, they have to be reset once in a year, and entire, policy transmission doesn't take place. So to that extent, even if we look into prior to this announcement, 140 basis points is that has been increased. Whether the interest rates have gone up by that extent, absolutely not. Even you would see the bond prices, though they moved prior to the announcement little bit, but then they moderated to around 7.35%. So personally, I do not see that the banks, banking sector is going to be adversely impacted because of this particular policy announcement, excepting to the extent of the loan portfolio, which is linked to the external benchmark, which of course, but whether it will have a positive impact, personally, my view is, so far as this aspect is concerned, yes, it is going to have positive, because this will improve the NIM, because the banks never increase deposit rates. They always increase deposit rate with a lag, and that is also very, very nominal increases take place rather than the kind of, increases announced in the monetary policy announcement. But looking to the fact that the credit growth has gone up to 16.2% and deposit growth is not keeping pace with the credit growth, I think the banks, in order to meet its credit requirements going forward, will have to go in for increase in the deposit rate, which is a good and welcome development so far as depositors are concerned, particularly old age pensioners. And that strata of the population which depends upon the interest earning on their deposit for their sustenance. So for them, I personally believe the banks will be left with no option but to go in for little aggressive increase in the deposit rates in order to meet the credit growth because of the kind of growth that has taken place and is likely to take place going forward. So to that extent, I think deposit rates may go up a little more than probably what we have experienced in the 3 previous policy announcements of rate hike. That's another viewpoint. But the major impact on the banking sector, I personally believe, is going to be on its treasury income. You would have seen from the balance sheets of the banks that have been published for the Q1, most of the banks have performed very well on all other parameters, excepting in the context of the treasury income because of mark-to-market losses that they have to book on their available for sale and for trading portfolio in the investment portfolio. I think the treasury side of the bank's operations are going to be definitely impacted because of these rate hikes. And there is not going to be any respite in this. Only the banks who would be very aggressive in doing trading of the portfolio may be able to insulate some of the losses, but otherwise, this is definitely going to impact the balance sheet of the bank.
Give you an opportunity to ask a question. So over to the senior mentors, and I'll start with Tanksale sir for his comments.
Thank you very much. I think sincere thanks to all the 3 speakers. A very comprehensive coverage and coverage of not only the policy but its implication nicely covered by Kalia sir. So I think there is hardly anything that can be really added or questioned. The only 2 things which occurred to my mind as a banker, that at the point of time when the credit growth is really shaping up, NPAs have come down to 4% and we expect it to further go down. I only suggest the bankers to go have a very cautious and informed credit growth, so that, we have seen such a time of 2008 to 2010 when everything was fine and we have grown, and then we have seen the implications from 2012 onwards to till date. So I think because Kalia Sahib has also clarified that the liquidity would not be a challenge, and pricing in any case it gets passed on to the customer. But the bankers will have to be very, very cautious which sector, which area, and whatever validations, whatever assumptions they take it for the cash flows over the period of next 2 to 3 years, they must validate it properly. That is one caution I will request. But then, yes, we must look for the growth. Now, I think Mr. Kalia has very clearly said that this is in such a volatile time. Ask your exporter importers to remain hedged rather than trying to speculate, because we really do not know what way the things will move. We have seen Sundararajan Sahib has given a wonderful chart. Although dollar rupees impacted just 7%, other currencies have impacted much more. But at the same time, you do not know. There could be a cross implication of the other currencies on us, like euro and Swiss francs and all that. So, the remaining properly hedged and cautious about it is another thing which I'll definitely see. The third thing is wonderful initiative by Reserve Bank of India on the expected credit loss method, which most of the corporates are adopted today under the Ind AS, the ECL, what you call it. I think if the bankers also work on that.
All NBFCs have also already transitioned to Ind AS.
Yeah. So I think let the paper come, and Arvind,
discussion paper.
Arvind, that once that paper comes, you can bring that paper also for deliberation.
Right, sir.
And
I
comments
mean,
and
because-
suggestion, that's a good idea. Very
Yeah.
good idea.
Because what happens, those papers come for the public opinion.
Of opinion, comments.
Maybe your opinion may not be entertained by Reserve Bank directly, but our colleagues through their banks can reach it to IBA, or we can collectively give it to the IBA
Right.
that this is what is the deliberation and the views. I'm sure all my senior colleagues will agree that this will be the right approach to respond.
Very
Because
good,
that is what
very-
is the objective, if I'm not wrong.
बहुत बढ़िया. Yeah, this would be very good.
ठीक है
idea.
सर, सुंदराजन सर.
So please
Sundararajan
unmute
sir.
yourself. Sundarajan, sir, please unmute
Suman,
yourself.
yeah, more. I agree.
So I think any such discussion papers which come into the
Correct.
the system, Arvind, you can bring in for discussion, and we can make it open session.
Right, sir.
I mean, while the mentors are there, the general
Let
managers who are-
everybody come out. with their
exactly,
suggestions.
those general
Yes, sir.
managers and DGM, those are hands-on. If they come, I think there will be a good mix of the opinion exchange and we can formulate a paper. I'll be too happy. This is what I've been doing in IBA. I would
Right.
like to.
We have a lot many general managers and DGMs in this
Yeah.
as members in our group.
I think that's,
And I think they will be contributing a lot into this discussion.
yeah, I think that's enough from my side. Thank you very much.
Thank you, sir. Thank you. So any questions, or if the mentors want to make some observations?
अरविंद जी
Yes, sir. Please welcome, sir. Welcome, sir.
या थैंक यू मैं जुड़ा
माता जी,
तो बहुत
नमस्कार।
दिनों बाद हूँ लेकिन मुझे आज ये ज्वाइन करके ऐसा लगा कि हम रिटायर्ड लोगों के ग्रुप में नहीं है ये तो जैसे टीवी में नहीं आता जो बैंकर्स इकोनॉमिस्ट बात करते हैं बड़ी जबरदस्त चाहे कालिया साहब हो चाहे सुंदराजन साहब हो आई थिंक nothing can beat a very intelligent discussion conversation. I am impressed always, and I thought to make just small comment and sir, my
Thank you, sir. Thank you, sir.
Good, Anil, good.
Thank you, sir.
Thank you. So there is a question from the audience. I'll just
Yeah.
ask the question. My question is that RBI projections as far as GDP and inflation is concerned has always been optimistic. We understand that it is for positive sentiment across the board. But how far having this approach is good for reputation of RBI?
Now, I mean, can I say, sir, or Sundararajan
Yes,
sir,
sir.
you
Yes,
would
sir.
like to?
All
you
of
can.
you can make your
Please,
comments
please.
one after the other.
You see, personally, I mean, we have to definitely make observations on the basis of the data that is presented, right? Now, if they are talking about the growth projection to be 7%, and if they are coming out with all the relevant reasons why they believe that the growth is now, if you look through the statement of the governor and why we read out certain aspects, why I was pointing out to the optimism about the growth. He is talking about we have this, he talked about late recovery in kharif sowing, he talked about comfortable reservoir levels, he talked about credit growth, he talked about, government continued thrust on the expenditure, he talked about improvement in capacity utilization with all the data. Now, if we believe that these data are not true, that's a different proposition.